Hi there, this is Bill with Smart Trades and wanted to take a look at the long-term count on the Dow since some folks have made comments about the validity of that count. Um, we use the Dow in large part because we don't have any other data going back far enough to see prior to the 1920s peak. Indeed, my data only goes back to the early 20s, and what you would see here if the data went back further is that indeed wave 1 started at a lower price below this associated wave 2. Also, I'd like to just say right off the bat too that I've got enormous respect for Robert Prechter. I actually attended his seminars and read his books back in the 80s, and that's how I got my start with Elliott Wave. That said, back in the late 80s, I came to disagree with him in terms of the long-term count and suggested that the next correction, rather than being a huge crash, was going to be more of a 1970s style sideways pattern. And the reason for that is the nature. I just basically relabeled. Prechter has the 1929 to 1932 time period labeled as a 3 and a 4, and I've relabeled that 1, 2. And on this note, let me quote Prechter, and this is in his book, The Elliott Wave Principle, Associated Rules and Guidelines on Wave Personality. And on second waves, he says that they often retrace so much of wave 1 that most of the profits gained up to that time are eroded away. And indeed, if you look at the 1932 decline, it's a rather steep decline, and it's about an 85% decline of the previous wave 1. So, you know, basically that fits the personality as he's noted in his book. Moreover, on wave 4s, he says, more often than not, they are complex waves building their base for the final fifth wave move. And as you can see, the wave 4 in the 1970s was indeed a sideways, very complex pattern. And I believe we're into a very similar pattern right now, just on a larger scale. Moreover, the rule of alternation suggests that if you have a deep zigzag style wave 2, that wave 4 will be more of a complex sideways type pattern. And that's what I'm calling for here. We've got ABC down. This little green line, by the way, is 1.618A, which is a typical relationship. I'm labeling that decline just as A. Now, what's going to happen here, from in B and C and so on of this large fourth wave remains to be seen. And there's a variety of ways it can go. We could carve out a triangle. We could carve out a double flat. We could carve out a relatively simple, B up, C down, and basically have just a very, very large flat. And if indeed that happens, a proportional target would be a moderate new low down around the 6,000 level, which would coincide with the trend line from the 1932 lows out around 2017. Now, obviously, when you're looking ahead to 2017, this is, it's difficult at best to predict what's going to happen. So, as always, we'll take it one step at a time. That said, the reason that I'm using the Dow trend line from the 1932 lows connecting to the 1982 termination point of what I call wave 4. Is that there is no S&P or NASDAQ data that I'm aware of, and certainly I don't have access to it. So if anybody has it, hey, please share it with me. A couple of quick notes too on momentum. The momentum peak for this move using the ADX comes in wave 3 of 5 of 3. That's a pretty good indication that, in fact, there's more to come, because basically you're going to have peak momentum somewhere near the middle of the move rather than near the end. So On a very long-term scale, the possibility that we're going to have a large wave 4 and then a large fifth wave out of there is consistent with that peak fairly late in the third wave. You can see the second highest reading was on 3 of 3 of 3, and typically that's the middle of the move, but obviously at this point it can't be the middle of the move. We've already gone up significantly, more than 50% from there. So anyway, that's my long-term count. It's obviously open to revision as time goes by. Moreover, predicting B waves is nearly impossible, so we'll just take it one step at a time, see what happens. But I do think that this count, if you believe it, favors that we're not crashing, but rather going into a sideways pattern that still has many years to unfold. And so at least gives us a roadmap of what to expect, and we'll see if it follows that. Obviously, if we start breaking through the March of 2009 lows with lots of momentum, this count is wrong. But it's worth noting, and it's certainly worth putting in the back of your mind as you watch these waves unfold. Anyway, thanks for watching, and have a great day.